And Rahul, considering all the discussion which we had, what do you think VCs can bring to the business? On one side, we have some e-commerce companies, and the other side, we have segments in education which require more investment, but the return requires a lot of time.
So, the venture capital industry has obviously grown tremendously in the last 10 years. When Alok and I got in the business about 10 years ago, the entire amount of venture capital in this country was about $250 million a year. Last year, if you exclude some of the big ticket transactions, it was about $2.5 billion. So that's the extent of money that's coming into the country to drive innovation, to drive entrepreneurship. Now, the venture capital industry works on a very simple principle. If I give you one, hopefully I'll get 10 back, right? So I think at the end of the day, the venture capital world is really seeking disruption, seeking innovation, seeking high growth businesses. And so, the first wave of technology was about organizing information, which is why you saw a lot of the information services being funded. Then we moved into transactions, and you saw the big horizontal companies getting funded. And now, the wave has moved to more verticalization of e-commerce, as well as a bunch of other consumer internet services, right? Equally, one of the areas that is attracting a lot more attention is enterprise, because for the longest time, enterprise software was very hard to sell, channels were hard to build. But now, the phone is really the predominant way that people manage their channel and manage their resources. And all of these are really computers, so you can put a lot of software on a phone. And so we're seeing a lot more interest in software as a service. We're also seeing a lot of, interest in platforms that enable growth of these businesses. So logistics, supply chain, payments. So if you will, the people that provide the arms to these big guys to allow them to be successful, right? So I think the venture capital community continues to look at the evolution of consumer behavior, adoption of technology, and tries to forecast out where would things be 3 years from now, 5 years from now, and those are the kinds of businesses they back. So I think there's obviously been a big run-up in the last few years. E-commerce is a very capital-hungry business. What you see now is things are cooling off a little bit. Many investors have already taken significant positions in India. The big rounds are taking a little bit longer to do. Equally, at the seed stage, there's been a tremendous amount of capital available. Not all those businesses are getting institutional funding. So I think it's the time when I think there'll be a flight to quality. The casualty rates in young companies will be a lot higher because there's just that many more businesses that got funded. So it's very important that if any of you have raised seed funding, are thinking about raising seed funding, give yourself a good 12 to 18 months to get to the next stage, because money will slow down a little bit. And so you want to make sure you are very clear about what milestones you're setting down, whether you're raising enough money so you don't run out of cash between your seed round and hopefully a bigger round of financing. So I think the guidance is, conserve cash a little bit, make sure that you can pace yourself, and don't, expect to raise money every 6 to 9 months.
Alok, do you also have a similar opinion?
No, absolutely. I think raising money and spending money are two different sides of the business. Simply because you can raise more does not mean you have to spend more. So I think if you can raise the money, I would say go get it today. You don't know what it's going to be like 6 months from now. But I would be conservative about the spending strategies, because there are clear signs that there might be a little bit of a contraction going forward. So I'd advise entrepreneurs to be very careful about their spending plans.
Mr. Dharmaji, since SIDBI is into venture financing as well as loan funding, so what would be your advice?
Yeah, that's a good question. See, venture funding is there, but in venture funding, there are challenges for the SMEs, basically. Right from valuation of the project, how much equity to give, what sort of exits are there. So that's why SIDBI brought this risk capital, that is subordinate debt, where the assessment is easy, the exits are easy, and the returns are also not very high expectations. So this is one risk capital we have done. We have the startup schemes. In the startup scheme, right up to 1 crore rupees, which most people require, we have. And the bankers, when you go to a banker, See, when the rate of interest is lower, they expect some kind of collateral. So when you go to a banker, they will say, give me collateral. So most of the startups don't have collaterals. So we have this collateralized credit guarantee scheme. Up to 1 crore you can avail of credit guarantee cover, and you can avail of loans from banks and institutions. So the second thing. Now for people who have started and have little traction, we have have the Smile scheme, wherein we give some kind of soft loan also, and normal loan at very competitive rate of interest. This is way to encourage new people. We have actually started an India Aspiration Fund, wherein we give money to venture capitalists. It's a fund of fund schemes. We have a 2,000 crore corpus. In fact, this fund of funds we have been doing for the last couple of years, where we have encouraged a number. So far, we are working with about 70 funds across the country. We have subscribed to these funds, a part of it, 20-30%, which they on-lend to it. So, especially for startups, my prescription is, as far as possible, debt funding is the most important thing. You take debt funding, and then once you scale up, you have equity. There, what you have is you have bargaining power. You know where you are. Otherwise, if you go right from beginning without much traction, without much negotiation strength, then you will have a problem. So I feel even the banks are encouraging startups, especially after the government has mandated the banks to do it. So startups is the thing. And the bankers always look at what sort of marketing tie-up is there, especially for franchisees. I think that to that extent is solved. Since if you have a tie-up with some big McDonald or some other company, Naturals, things like that, to that extent the risk is reduced and the banker feels safer to give money.
Thanks. And coming back to the business, Manav, we have seen a lot of debate around M-commerce and e-commerce. So what's the strategy for AskMe?
I think there is no debate, if you ask me. The largest growth in terms of consumption, in terms of traffic, in terms of commerce is, of course, mobile driven, largely because India as a country, rode on mobile wave rather than the desktop wave. There are certain categories which are more immersive in nature, like AskMe has launched AskMeFurniture.com, where we have created a marketplace for SMEs who are in the furniture space. So those categories will be largely driven by mobile wave, whereas most frequented categories like grocery, where there is recurring consumption of the same brand, it may not be that much desktop driven. Right?
So Siddhant, your...
Yeah, so from having a presence across channels, I think definitely nobody can ignore mobile. If you're talking online, you have to be, you have to have a presence on your websites. You need to have a website, a mobile app. You need to have a mobile website. You need to pretty much have a presence across all three. Increasingly, I'll agree with what Manav mentioned as well. Increasingly, mobile will become the larger share of transactions, at least for say fashion, where most of our TG is browsing and engaging with our apps a lot more before making a purchase decision. So just the fact that it's closer to them, it's accessible to them all the time, they're able to look through a lot more products, just having that in the hand of in your palm. So definitely cannot ignore that. One more trend that we see increasingly will become relevant would be having presence across even offline, which will become omni-channel. Right? So that integration that we expect to see, maybe say in a couple of years now, is something that will play a big role. You order online, you go pick it up at the store. You order at the store, it gets delivered at your home. So yeah.
So before we throw the floor open for questions, Rahul, would you like to add any perspective?
I think that this is an interesting time because there's equally lots and lots of opportunity, and I think there are some clouds gathering from a financing standpoint. So I think there's never a good time or a bad time to start a business. I think if you truly do believe that you are equipped to go out, you should go do it. It takes a long time to build anything of scale in this country. So I would just say that be mindful of the fact that funding will come and go, but I think if you're truly committed to something and you want to build an institution, you should do it.
Let me also add to what Rahul said, right? Now when we had decided to start Ask Me Grocery, grocery largely we are looking at it from a hub and spoke SME participation space, right? So I today cover entire Delhi NCR with about 30 hubs, where the hubs backwardly cater to particularly designated neighborhoods and have done forward relationships with the grocers and the hypermarkets in that neighborhood as well. So for 30 hubs to take care of entire Delhi NCR, I've already done relationships with about 120 to 150 grocery guys, right? They are seeing incremental value in terms of the transactions, and for them to achieve that scale and growth, they may want to come back to Alok and Rahul to say, okay, for me, how do I manage my incremental working capital life cycle, etc., etc. And imagine if I'm looking at aiming to do the ramp up across India, this 120 number will go to possibly 10,000 across grocery, furniture. And this is not only Ask Me Furniture or Ask Me Grocery, this is across, grofers of the world and, egg basketers of the world. So that's the, movement of the needle in the ecosystem. And which is why from a fundraising standpoint, people would have to look beyond equity as the only option.
Mr. Jaipuria, you have taken both the routes, equity as well as debt for financing?
Yeah, of course, across variety of business lines, we've taken both the routes. But just to summarize, I think across the panel, the first thing that everybody is saying is that if you have a passion, there's no wrong time to start a business. Now is always the right time. If you have a passion, you have a vision, you're clear what you want to do. Secondly, as the age that we are living in, which is more services oriented, whether you're going to come to one of these VCs, whether you're going to grow your company or your own, you require the right team, the right set of people, invest a lot of time and effort in getting those people together. Personally, I would advise invest highly in intangibles, so whether it is your supply chain, whether it is your technical know-how and training your people. And thirdly, because this is a franchising event, some of you would come and potentially look out for franchisors. Be very clear of what your expectations are from a franchisor or a franchisee. One, of course, is a brand name, which helps you mitigate some risk. But eventually, if you are getting into a business which you yourself are not technically sound into, it's important to look for a franchisor that would be able to provide you with the services support, would allow you to deliver quality to whoever the end consumer is in a way that you find satisfactory. And don't just chase the brand for the brand and you have a brand that gives a promise but is not able to deliver on that promise. I think that said, everybody has their own way of achieving success and growing, and each of you will be able to do that in your own way. Thank you.
Great. Alok, your piece of advice, both from an entrepreneur and investor perspective.
I'll say go out and start your company if you haven't. And if you have, then set what is interesting for you, objective in front, because I think over the next 4 to 5 years, we, as a country, we are going to see immense growth. And as entrepreneurs, we are best positioned to leverage on that growth. So all the very best.